Speaking of frogs.
All right, cool. All right, let's start this. So I'm sure you guys all know the reason behind this meeting. We've only been
No.
talking about this meeting for the past, month and a half or 2 months to try to go over trading plans and how to create trading plans and the importance of trading plans. Has it not been at least a month or two? I feel like it's been a long time. I've been saying that we were going to do it, and we haven't done it. Right?
Yep. Oh, yeah.
So there are a few things that really come out of writing down a trading plan. The first thing is guessing. Keeping guessing out of trading. Guessing on when to get in, guessing on when to get out, guessing on how much money to put in. Doing all these things last minute or at the spur of the moment will get you in trouble. Not having a plan that lays out as much as possible is going to get you in trouble when you're going into a trade. There are so many variables. I mean, even myself, and the plans that I have are insane. They're really extensive. I mean, they're the same plans that I've been using for years, so they come second nature to me. But even doing this for years, having the same plan that I use every single day, looking for those same traits every single day, there are things that are thrown at me constantly throughout the day, and things that I have to still react to quickly. That can get me into trouble. I can't even imagine the amount of things, if I didn't have a plan, the amount of things that could affect my trading without structuring the trading the way that I've done. It's next to impossible. And you can talk to a bunch of people and say, okay, well, what kind of trading plan do you have? And they can respond, well, I don't need a trading plan. Look at look at the gains that I've been having. At that point, I would turn to them and say, okay, let me see your account growth. And I will put money on it. If they don't have a trading plan, their account has not grown. Their account has fluctuated. It's gone up a lot. It's gone down a lot. It's gone up a lot. It's gone down a lot. Maybe you're catching them when they're in that up stage and say, oh, okay, well, I started with this amount and now I've doubled it. At that point, say, okay, you doubled it. Let me see your account history. Let me see how your account has been. Has it been fluctuating, or has there been steady growth? Has there been spikes and drops and spikes and drops? Like, what is it? But the people that don't really have a plan, and it's totally okay, creating a plan, it's probably something new to almost all of you. But not having a plan is going to do that. Either you're going to blow your account totally, or you're never going to get anywhere. You're going to do really well, and then shit's going to go inverse. Then you're going to do really well, and then it's going to go inverse. It's the structure that will continue and make your account grow. It's important. And taking a look at the screen and that form that I have up there, every part of that is important, and I'm sure each one of those, or a good amount of those different criteria, the entry conditions, the exit conditions, trading instrument is something that you guys are going to know, the time frame and position sizing, those four things might seem simple, but they're really not. And the hardest one on there, I'm sure, is position sizing. Anybody in here, are you guys position sizing? Do you know what position sizing is? Do you know how to correctly position size when you're entering and exiting a trade? Does anybody know what position? I know one person does, because I have read his thing on there, his trading plan, and that's Justin. Anybody else know what position sizing is?
I do not.
Okay. So I'm going to take that. Most of you guys don't know?
Yeah, I do know what position sizing is.
All right, Nick, do you use it? I'm guessing you do, right? Or you at least you know.
Yeah, I mean, obviously, position sizing is you know, you could take a small position or a large. Pedro, for example, was mentioning that, you know, he has a much larger account. So when he takes a position, he's putting $3,000 on the line versus, which most of us aren't. That would be probably the more extreme example would be Pedro, who's putting a position and he's putting $3,000 in that position. Whereas myself, I might keep them, you know, in like a 200, maybe 400 max range.
Gotcha. Okay. So this is the best way for me to give an example, and I hope most of you guys are options traders. But the best way for me to give an example of how to position size and what position sizing is goes like this. If I have $1,000 account, my account value, full account value is $1,000. And I take a position in an options trade. And I wake up the next day and I realize that that options trade went totally the wrong way. And overnight, that position value is zero. Whatever I put into that trade originally, whatever I opened the position with, is gone and will be gone, and I won't see it through expiration. Knowing that in my head, knowing that I could have a scenario like that, I don't want to enter an options trade with a $500 position on a $1,000 account, because at any point the next day, that $500 could be gone, and now my account value is cut in half overnight. In order for me to know what the risks are, or what my position size should be in an options trade, I have to know what my max loss or what the highest probability of loss is. And with options, that's 100%. With stocks, I doubt you're going to wake up, unless you're picking really shitty companies. I doubt you're going to wake up with, what do you call it, more than a 10% loss with stocks overnight. Can everybody agree with that? I mean, 10% is a huge hit overnight in a stock position. That's a big hit. That's kind of crazy. But with an options position, overnight you can be at zero easily. So when I'm looking at a trading plan, and we'll go over we'll go over those other things, but not right now. I'm going to go over the position sizing, because that's really the most important. I want to use these fucking drawing tools, but I don't really know how to do it. All right. So what was I saying? So if I know that options can give me can change that position value to zero, from whatever it is to zero, I'm going to go into an options trade and say, okay, I'm going to position size in this way. I have $1,000 account. I am willing to lose $100 or $150 on that. I know with options, overnight, I could lose all of it. In this trading plan, I'm only going to have a max loss, or a position size that translates to 15% or 10% of my account value. Do you guys kind of understand the mindset behind that? I'm just trying to give a really basic idea of what position sizing means. And that's the option side. You know, the option side is, okay, overnight I could lose 100% of a position value on options. I want to position size these trades according to my full account value right now. My full account value is $5,000. I'm only really willing to risk and open a position that's 10% of that value. If you're not swinging overnight and you're staring at a computer, you could say, okay, you know, I'm not afraid. I know that I'll be able to be more in control, buying and selling these contracts intraday than holding overnight at 100% loss, where I can jump out of the position if it starts to go the opposite direction. Now my time frame is going to be intraday. My position size could be 40 or 50% of account value. That's horrible. I'm working with it. Do you guys kind of understand that?
Yeah.
Yes, sir.
Great. I don't know how to erase these things. All right. So that's position sizing. It's really important, especially with options trading. It's extremely important. Position sizing with stocks goes like this. It depends on what kind of stocks you're trading and how volatile those stocks are. Penny stocks, you're going to get to a threshold where you're going to be like, okay, well, if I'm trading penny stocks, then I don't want to do anywhere near my full account value. I don't want to do 50% of my account value because penny stocks can literally move 30 or 40% in either direction intraday easily. You know, you could lose 40% of that, and that's very similar to a stock position. You can lose 80% overnight. But with the large cap stocks, something like Apple or whatever, you're not going to get it'll be mind-blowing if you get a 10% drop overnight. So at that point, if you do have $1,000 account value, you can throw $500 or $600 at it. You can position size according to the moves that a company makes or how volatile it is. You guys got that?
Yeah.
Okay. Time frames. I kind of just went over the time frame. Time frame and position size. I mean, they're all connected. Each one of these things, the entry conditions, the exit conditions, system type, time frames, position size, and they're all connected. But you should really connect position sizing and time frame. Maybe as you become more experienced, you can increase your position size. If you're able to stare at the computer more and, if you're there and you're able to babysit it, maybe you can position size higher and, do it on a smaller time frame, maybe overnight or maybe a couple hours, because you are able to react in a certain way and, very quickly. So those can go hand in hand and you can kind of readjust accordingly. Further out time frame, maybe you don't want to have as large a position size. Shorter time frames, maybe you do feel comfortable risking a lot more, but having your finger on the trigger ready to jump out. All right, we'll go back to the beginning. System type. Can you guys give me some examples of how you guys, what you guys look for to enter a trade? Are you looking for a bounce off of a support level, a slam down off of a resistance level, hitting a moving average? Dustin, what are you doing intraday now?
Intraday, I like to play, obviously the WAP. WAP's a big play for me. Trend lines. I like to play the double tops, double bottoms. Try to get the breakup. Pivot points, another one I like to run off of. About it.
Gotcha. Anybody else?
I'm still pretty new at trading, but I typically just go off news and then talk to other people about entry points.
Gotcha.
Kind of look for crossovers on EMA.
All right. So, sorry, something that I wanted to. Damn, I'm not gonna do that. Lisa, it was you.
Damn it, man.
I think she's bowling again. It sounds like she's bowling. She does this when she's bowling. All right. Sorry. Yeah, let me backtrack real quick. So, every day you guys are trading, you're building a plan. You're coming up and you're engineering a plan. Even if you're doing some reverse engineering with your plans, and do you guys know what I mean by reverse engineering? Anybody want to guess on that one? doing everything the fucking wrong way and losing money. That's reverse engineering a plan. Hopefully you're looking at what you're doing and why you're losing money to formulate what you probably should be doing the inverse. But anytime you hit that buy and sell button, you're creating some type of reverse engineering.
Oh, wet, huh?
What else do I have to mute? Damn it, I'm recording this too. Cool. So the people that don't really have a plan, do you guys kind of see that you're looking for the same thing? Maybe you don't even notice that you are starting to build some type of plan. Does anybody notice that they're kind of looking for the same patterns on their own?
Absolutely.
No, Eric, you got some sneaky stuff going on over there. You definitely have some plans going on. Dustin, I'm seeing this character making some bank, and he's not telling us his secrets.
I'm gonna crack him. I'll get him.
He's got some kind of plan.
He's rolling with dumb luck. I'm going the other opposite direction. No way.
But you're all doing it. You know, even the new guys, you're starting to watch and what do you call it? You know, and learn a little bit. But you're starting to build something. You know, and everybody that's been in this room for a while, you guys are all doing your own thing. You're all building a plan. What do you call it? Is Joseph in here? I know even Joseph's looking at stuff. Joseph, are you in here? No, he's not. All right. But that's the system type is really the foundation of the plan. What are you doing? Are you looking for stock price to hit a certain level? Are you looking for it to hit a support level? Are you looking for a downside move and you're waiting for something to peak out? Do you do moving average crossovers? Are you using VWAP?
All the above.
What was that? Sorry.
All the above.
All the above.
Yeah.
All the above. That's pretty much what I do. It is. I mean, you know, if you want to take a look at the what I trade and how I trade intraday, this is my go-to. No, hell no, I don't want to delete that.
Can you guys hear me now?
Yeah.
Yeah, I definitely am not holding back. Trust me. I would definitely want everyone to win with me. It's just not happening.
He was shaking over there like I gotta get on the mic. I gotta get on the mic. I gotta tell him.
Dude, my mic was not working. And then I got kicked out. I was like, oh great, these guys are gonna think I left the room because they were talking shit.
Eric's been killing it. Eric's been killing it. Yeah, he just tells us when he closes out of position.
James too. Another one right there.
So this is my extensive plan. This is really the only chart that I use, but I use a combination of a few things. I use chart patterns as well as these three lines right here. This light blue one, the white, and then the dotted blue. That's what I do when the stuff crosses over in a certain direction, and you know all these other things happen to make the perfect storm. You know that's how I enter. But it's a combination of a lot of things. Unfortunately, when you get 1.5 million things going on at once, and you're using a ton of different indicators and you know, what do you call it? Studies. No.
The WAP.
And your charts start looking like that, you know, what'll happen, or what I've seen happen to most people, is they start to get distracted. And now you have different indicators and lines and all this other crap that are telling you different things. One thing is telling you to buy, the other thing is telling you to sell. Then you have something that has indecision, and you're looking around trying to figure out what the hell all this crap is, and it's over, and you're done. Putting way too much into it, and you know, having a massive amount of indicators can be counterproductive. It can absolutely be counterproductive. That's something that you don't want to. That's something that you don't want to start doing off the bat. Maybe as you start to get more involved with creating plans. But I don't even, you know, I try not to use it. Trust me, it might look crazy, but this is pretty fucking simple shit.
I'm about to set another line.
See,
Can't help myself.
You're starting to have some crap.
Can't help myself.
It's all right. Once you start dialing in and getting that to where you want it, you'll start moving the excess crap.
That's
a
what I
good
need.
point. All right. System type. So keep it basic. You know, my favorite things are the support and resistance. You know, a good place to start would be a system type of support and resistance, maybe a support system type. So the first part of that, and I'm going to write this stuff down as I go, just to create something general. I can't even do the annotation, right?
Dude, you use Internet Explorer?
Dude, no, it just pops up. Look, I have.
Oh my god! Oh my god!
Can I edit this? Let me not do this right. Let me not do that right now.
You should close Pornhub before you start these meetings.
You're not trying to record this.
Oh, I'm sorry. I forgot, dude.
It doesn't even matter.
That's what post is for.
Yeah, it's over.
Rewind. Cut me out, director.
Support bounce. Time frame. Let's do, I don't know. How about a daily chart bounce? Right? Trading instrument. You can skip it. We're looking for stocks, right? Position sizing. This is going to, shit, that sucks. We're going to do all right. So our system, my system type is going to be a support bounce. I'm looking for something that's going to bounce off of a support level and continue to the upside. My time frame is not going to be intraday. I want to be able to hold this for a few days. So I'm going to look for a stock that's going to hit is hitting a support level. I'm going to buy in with hopes that it's going to ride up. And we'll figure out where we want it to ride up to next. Trading instrument, stock, position sizing, really fucking important. Really important. You really need to know what that is. That's going to save you as you start to build and recreate and adjust trading plans. This is going to save you. This line right here. I can't emphasize it enough. I can't. I really fucking can't. I can keep cursing, but I can't. You need to position size correctly depending on what you're doing. I'm doing 40% of the account, knowing that I probably will not wake up with any more than 10% lost overnight. Entry conditions. My first entry condition, make it simple. How's that?
Yes.
Good.
Oh yeah.
Second entry condition. So if I'm running this on a daily time frame, so I'm looking for the daily chart, not the intraday chart. I'm looking for the daily chart to hit a support level. I don't want to catch it day 3, day 4, day 5 after the support level. I want to catch it in the first 2 days. I'm going to put that down there. The next one.
And now, on this, the criteria change a little bit when you're, let's say, puts and calls, right? If you want to swing trade a call, you want to make sure it's trending above the WAP. It's an uptrending stock, showing, lots of support. And then versus, maybe a put, you got different, criterias that you're looking for, right?
Correct. So this is an upside support bounce.
Okay,
So
cool.
we're looking for the upside move.
Okay, yeah. So you want it like trending above the WAP, stuff like that.
Yeah. Well, so with this one, I'm doing stocks, right? I'm doing it on a larger time frame. Maybe looking for a 3-day swing or a 1-week swing or a 2-week swing. I'm trying to be a little general, but when I'm looking at the daily time frame, I don't even have to really dig down that deep intraday. Especially with stocks, I really don't have to dig down that deep intraday looking for VWAP or anything else. An intraday, an intraday trade or maybe just an overnight trade, I would. But if I'm looking at stuff on a really large time frame, especially with stocks, because I can hold on to it for a certain while, I can almost literally just look at daily candlesticks.
Yeah.
Yeah, Dustin, like for me personally, like since I trade so far out, as far as time frame goes, my put or call doesn't change because I'm looking for the overall trend of the stock to either go up or go down. So my entries for the stock that I pick are the same.
Now, are you really picky on your what do you call it? Because when I swing options, that's something that I don't do. I don't really care about. Are you really picky on your fill, like on what your price is when you get it?
I always go for mid price, and I'll wait, to get filled. And if I think if the price changes a whole lot, I'll cancel the order and I'll resubmit the order at a new mid price. But I hardly ever try to go low or high just to get filled. I always go for mid price.
But are you staring at the chart intraday like I need to get it right here, I need to get it right here, I need to get it right here, watching the trend, the intraday trend?
Well, I try to get it based on whatever the stock price is changing at, and trying to get that good options pricing. Yeah.
Gotcha.
Depending on what kind of stock it is, I'm more picky if I have a larger bid-ask spread than I am with the stock that has a tighter bid-ask spread, because usually I get filled instantly on those that are more liquid.
Gotcha.
Stocks that aren't as liquid, I have to be very picky on.
Yeah, see, when I used to swing trade options, even when I do, I mean, I haven't in probably months now, but when I would swing trade options, depending on the time frame and what I was looking at, if I was looking for a gap fill on the daily chart, and it was going to take a week or a week and a half to get to that gap, at maximum like a week, I wouldn't be picky about my fill intraday. I would just want to get into the trade. Like, so with here.
Well, I guess I should maybe make that a little more clear. So when I'm doing spreads, I am very picky on the mid price. But if I know I'm looking for a 50 or 60 or 100% move, then I usually just try to get filled on it and go. If I'm just trading straight option. But debit spreads, I have to be picky about the fill, because I don't want the one I'm selling to go against me.
Gotcha. Yeah, sometimes I don't, with my swing, sometimes I won't even care about the fill. I'll just want to get in. If I'm trading intraday with expectations of getting out, at any kind of intraday trend reversal, I'm going to be really picky and I'm going to walk away if I can't get in at the time that I need to. But with the swing trade, you know, even midway through the day, I'll go in blind. I have no problem not even looking at the intraday chart, just looking at the what do you call it? But that's the difference between the mentality of the time frame.
Yeah, it is.
You know, the longer time frame, I really don't care as much about the fill as I do about the time and fill. Give me 1 second. Back in a minute. Yeah, so I gotta get back. You know, I gotta get into the trade. You know, I don't care about intraday because I am looking at the larger picture, and the larger picture is days or maybe weeks or however long. So I really don't care about that. Intraday, it's different. You know, I'm really picky because my time frame's a lot smaller, so I have to see something happen within minutes. All right. Where was I? Shit. Dustin, where was I?
Shit,
Okay.
on your fills, and you were talking about your entry points.
Okay.
Time frame, yeah.
So entry condition on a support bounce for me is I need confirmation that the move is going to start to reverse.
Okay.
If I see, I don't know. Sorry guys, I'm trying to fight with these. I think I can do this here. So if I see a move that's dropping down, and I want to catch it when it starts to bounce, right? When it starts to pop up. Sorry, it's a horrible drawing. I need confirmation of this move to the upside. So if I have candles that are continuing to go down, right? How am I going to know that the thing is going to start to reverse and come back? Remove this, remove this, remove all this. I need to figure out how to know that. How do I know that? This is it right here. This is what I need to know. I need to find the criteria. The criteria that I would have for a support bounce would be, well, okay, I'm looking at this trend, each one of these candles. I could see the candles, the highs of each candles continue to get lower, and the lows of these candles. And I know this is something that we've, a lot of you guys have talked about, have heard me talk about this. The lows of each one of these candles continue to get lower. And I see day 2 of the bounce, almost can consider this the confirmation day. What are the characteristics? Well, I see this has a higher high and a higher low. One of my entry conditions on a support bounce would be how's that for a good entry condition? Another entry condition. Another thing that I know in trading is in a trend reversal, even a downtrend or back to an uptrend, the downtrends, when they start, each one of these trends, when they start, they usually do start with high volume. There will be, if this is, I don't know if I got the right thing. Sorry, I'm curving it now for some reason. You guys can still hear me, right?
Yep.
Okay. The start of a downtrend, any kind of trend reversal, should usually bring in higher volume. There's going to be more selling pressure to the downside at the beginning of the trend. Near the end of the trend, that downside pressure is going to die out. And when you have the downside pressure die out, and you get a little bit of buying pressure, well, that's going to start it back up. And even with the uptrends, near the top of the uptrend, I mean, why do trends reverse? They reverse when there's nothing left. You know, either they go up or they come back down. So on a bounce, what I'm also looking for, and this, you know, do you need it as an entry condition or not? You could use it. It could be even more of a confirmation, but I would look for something that has higher volume, or it looks like more volume is coming in on day one or day two of the trend reversal. The problem right now I'm having is if I were to flip over to a chart, all of this crap that I'm writing right now is going to be on the chart. So I can't even flip over and give examples, but I will write this down. All right. What do we have for other entry conditions? What are you thinking, Dustin? Or Justin? Bounce off support needs to be within 2 days of a bounce. So my entry has to be here or here. I do not want to have an entry here. This is not an entry.
Yes, like when I trade options contracts too, if I push my trades, or if I push a trade, or if I'm going to go into a trade, I usually only give it 4 days to go in that direction like you're talking. If it doesn't happen within 4 days, then I don't do the trade. I move on to something else.
So you close out of the trade, or?
Well, no, I don't enter it. So I give myself 4 days to enter that trade. Once I decide that's one that I'm going to get into. So I make sure that, you know, if it meets this criteria,
gotcha.
On the first day I'll get in. But if it takes up to 4 days to get it in, I can still get in it. But if it goes beyond 4 days, I don't get in the trade.
Boom, that's it. That's another condition. See, this is all this crap. I mean, that's sorry, guys. That's awesome. That's fucking awesome. You're taking the guesswork out of it. You know, you're setting a limit for yourself, and you know you're walking away if that limit is reached and exceeded. You're walking away from it. It's fucking awesome. It's the guesswork. It's that, you know, that gray area that gets every trader into trouble.
And
Well,
not
I think
chasing the
too-
trade.
Yeah, one thing too that, you know, I like with this, like you're looking for that daily chart bounce. Well, that bounce has got to come with a catalyst. So when I'm trading options, I'm always looking for that catalyst to make it go in that direction, because if there's no catalyst, you're not going to get volume and it's not going to move. That's why I give myself that 4 day thing. I'm waiting for that catalyst to happen. And if it doesn't happen within that 4 day window, then I don't get in it.
Perfect. There you go. Don't get faked out. Because that shit's been happening a lot. We're seeing
Oh, yeah.
market, everything's looking good, and then the fuck happens the next day. Everything goes inverse. So there was no catalyst. It was the fucking market that was moving.
Yeah, I cannot swing trade for the life of me.
Well, you saw what I posted today, right? I had a $1,300 swing today. I'm used to it, but I still was like a little sick to my stomach for a while.
Intraday?
Well, this morning when it opened up, all my put positions were in the money. So I sold $700 worth of contracts today in the money. Got out, had some nice profits, and then it reversed on me intraday, and when I was down $400, and then by the end of the day, I was back up to $1,100 again.
Dude,
So-
2 weeks ago, I was having like $1,200 or $1,300 days. Swings. My account would be negative, like -700 or 800, and then positive. It was back and forth. It was constant. I think one day I had a $2,000 swing. I was down like 8, and then I was up around 11 or 12.
Yeah. And I have to remind myself, I'm like, look, Justin, you got these contracts for January, so you got to give yourself time for it to be right. You know, it's, you know, based on everything else you've done, you know, it should. I got to tell myself that sometimes, because I play further out than probably most people do. So I have to be able to stomach this. If not, I need to trade. I need to change my plan. But I've been used to this for the last 12 years, so that's just kind of what I do.
Options are nuts. Give me a second. I'm gonna let my dog back in.
Fuji asks, what is a fill?
So, getting filled on the position.
Yeah, on your order. Your order is executed,
Yeah.
basically.
All right. More entry conditions. You can add stuff to this like this. Stupid things. So I don't know if you guys are really familiar. Far away from moving averages. The reason why I put that one up is if you're looking to pick something up on a bounce over here, right? This dog makes me crazy all fucking day. Stop, dude. Stop. If you're looking to pick something up on a bounce, right, over here, and you want to run it to the upside, if you're not paying attention to the charts that you really want to use, I mean, the studies or, the studies that you usually use, and you're not paying attention, and this gets me in trouble still, and you realize there's a fucking moving average right there, and you didn't even look at that chart. You didn't even look at the chart that has your moving averages on there. And now you're looking at the entry conditions. And all these entry conditions, and you didn't have the moving average entry condition on there. Everything's looking fucking great, right? Everything's looking amazing. You enter over here. It hits the moving average. Boom. Now you're fucked. Because you didn't have an entry condition that says, okay, hey, needs to be far away from moving averages. Or I need to cross-check all this stuff with other studies or other indicators. Maybe I have the fucking cloud over here somewhere or whatever, and it's going to be hard for it to get out of the cloud or break through the cloud. And now if I'm only looking at a chart that has just the candlesticks and maybe cool drawings, and it doesn't have my cloud lines or my moving average lines on it, I'm going to go in blind thinking everything's okay, and then I'm going to be in the trade and see the thing get slammed and drop back down and continue the downside. I'm going to say, well, why the hell did it drop down? Oh shit, the fucking simplest thing I totally forgot about my moving averages. I didn't check to see where the moving average was.
Yeah, that's one reason why I like using Bollinger Bands. I really don't I really like to see if it's going to keep into that range or if it's going to break out of it somewhere, too.
Gotcha.
That way if you're range bound or not, you know what I mean? So it's just good to follow it instead of having to draw trend lines all the time, especially if you're looking at smaller time frames like a 5-day or a 1-day chart. You can just follow the Bollinger Bands. If the candles pop out and then kind of see which way it's moving.
Yeah, no, that definitely works. But all these are things that, as you guys go along, you need to add stuff here. The more stuff you have in your entry conditions, the more stuff you can start to remove later on. I would rather have a million different things on the entry condition side for a new plan than only have a few and have to continue adding shit to it. And if I'm adding stuff to the trading plan, that means that the shit is not going my way and I'm losing.
It's not working. Yeah.
Correct. I would rather have a million things that are on here that prevent me from being in a shitty trade and then start to clear them out. You know, I don't know. I can't think of anything really stupid to put on here. But these are important. You know, look for your moving averages. My entry conditions are it needs to bounce, needs to be within a few days, higher high, higher low, higher volume, definitely a catalyst, but it also needs to be, I need to make sure that if I'm looking for a $10 move to the upside, I don't have moving averages or anything else in there that might cause a problem with me getting that $10 move to the upside. Sorry. All right. Exit conditions. So bailout condition is probably the easiest. You want to set a limit for your max loss. That's going to be pretty easy. Exit condition. I want to stay in the position for as long as possible. So when I set my price target, maybe at the top of this level right here, my price target would probably be up here somewhere. Let's say that I want to stay in. I don't want to miss out on a move, because if it rides up and it hits its price target and it continues to shoot to the upside, and I'm about to shoot myself in the foot for this, I want to stay in it. So what I'm going to do is I'm going to sell half at my price target.
Yeah, that price target's really important both for options and stock, because sometimes you can hit the price target on the stock and your option may not be where you want to do because you had too much, you didn't have enough time value left, or something else, you know, caused it to lose value along the way once you got to where you want to go. So once it hits that price target, yeah, I'm going to start selling off some of my position and my options as well.
Yeah, and that's why I try to tell everybody, and I even was talking to James, I don't know, it was the other day, I think everybody was talking to him about it. I trade options the same way that I trade stocks.
Yeah.
I rarely use all the Greeks. Really, delta is the only thing that I use. I look at the delta. That's because I'm trading intraday. I get it. I don't really need to worry about any of the other stuff, but that's what I'm looking at. And when I'm trading, I'm looking at, okay, Micron's at $35. I want it to hit 37. I think it can hit 37. Boom. I'm going to buy the Micron options right now as the stock is breaking $35. Boom. First price target 37. As soon as it starts to ride up to 37, I don't give a shit if my options, I overpaid for them, underpaid for them. If it hits 37 and I'm at a loss, I'm going to sell those options because I know it's hitting my price target. You know, everything is built off the stock price. But that's because I'm day trading them. I'm treating the options like they're stock. Just have higher leverage. All right, so I'm selling half of my price target. I'm going to sell second half. I don't know. I'm going to put a trailing stop on it. So as soon as it rides up to that, hits my price target, I'm going to sell half of it. Then I'm going to trail the other half, and I'm going to say, okay, if my position goes down 5% from whatever its current value is at the top where I sold that other half, if it drops down and I lose 5% of whatever the full position value is, I want it to sell. I'm going to sell the rest. And I'm going to let this thing ride. And if it continues to go up and break up and continue to go to the upside, the moment that it loses 5% of value from its peak is when I'm going to sell it. And obviously, you know, the people who are in the chat room, you guys already know, TD Ameritrade and, you know, a lot of the large brokers have those trailing stops, and they're doing everybody really well.
So basically, like the same criteria for like the 10% loss as your day trading, also for swing trading, bail out at 10%.
On a stock position, yeah, it's going to be.
Okay, stock. Okay.
Yeah. So this is. Hold on.
Yeah, I'll say mine are my losses are a little different because of the time frame and because of the size of the position. So I'll let mine go. If I'm playing like a day trade, I don't take more than a 25% loss. But on the ones that are longer term, sometimes you have to take a bit of a loss for them to work out. So
Okay.
I take a 50% loss on what I paid for the option.
Okay.
So you're allowing the fluctuation, right? Is that what you're
Yeah,
saying?
because I know I have to expect it, so I know that. But if I'm day trading one, like if you gave it like Target, right? So hey, we're gonna do a gap fill on Target today, guys, and I decide to get in that position, I'm not taking a very big loss on that because it's a day trade, and I know I'm in that position for maybe a couple hours, a couple minutes, and I'm gonna keep that one a lot tighter than the
Okay.
one
Yeah.
that I do monthly wise.
Dude, I just remembered I freaking played the wrong call today. Man, freaking Costco.
All right. So yeah, because I'm doing large cap stocks and because I'm doing only 40% of my account value, I'm willing to take a 10% loss
Gotcha.
at any one point, overnight,
Okay.
intraday, whatever it is. I'm willing to take
Swing,
that 10%.
intraday trade. Okay.
Yeah, it doesn't matter. And for the time frame, because I have no
Based off your plan, because you're already going off a balance from a support and all that, so you're not really expecting much more of a drop, right?
correct.
Okay. Makes sense.
That's a good point. That you
Yeah,
brought
yeah.
over that bounce because you're already thinking you're at the bottom of that time frame. Yeah.
Yeah.
So I
So
would probably
this,
go tighter
no,
one in this case, too.
actually, this would be wrong then. On a bounce, damn, I'm about to really complicate things. Maybe I shouldn't get into it. But on a bounce, I would not do a 10% loss on that. I would absolutely not. I would do like a 2% or 1%.
Well, yeah,
It would need
after
to- it would-
confirmation candle, then 10%.
Yeah.
Okay.
Well, no. So what I would do is, and I would calculate it out. I don't know if this is a fucking line or not.
Yeah, there you go.
Oh shit. So on a bounce to the upside, if I do get in as it's starting to pop up, my bailout is going to be right below there. I don't give a shit what that is. A 10% loss could be this. If I'm down there and that's a 10% loss for me, I'm way too. I shouldn't have been.
Shouldn't
trading.
be in there anyways because
Yeah,
it broke
correct.
your plan basically.
How about this?
I know how you trade, but I don't know how everybody else in here. They know how you trade. That's why I wanted to say something on that.
Perfect.
That's point. Like you're talking about confirmation to the upside. I like doing things in three, so I look for like 3 green candles, bounce back
Yep.
to the upside before
Break
I
of
get
the
in.
8 or the 9.
Exactly.
Yep.
I mean, do you see how we're just now we're going through and readjusting and creating a trading plan?
Yep.
Because that was a failure on my part. That was totally wrong.
Yeah.
That was a bad bailout point.
Yeah.
It was fucking horrible. But this is, I mean, what else for X? Here, let me look at my other stuff. I mean, my intraday is just crazy. I don't even want to show you guys my intraday exit.
But there's a lot of things that can happen intraday. That's why.
Oh yeah, my intraday entry conditions are even worse. I mean, sometimes there are ones where I had to use 2 pages. I have enough for my entry conditions on the one side. All right. Do you guys all kind of get the trading plan and how to start creating one?
Yep. Oh yeah.
All right. How about
Dude,
everybody else? You guys can jump in and type and text.
Can you share the KDan trading plan I posted?
Oh, it's definitely not buying the opposite of what you're buying. I'll tell you that.
Yeah, I would say it's very truthful.
Oh my god.
We know him way too well, don't we?
Wait,
Poor guy.
he's gonna come up with one for you. All right. Anybody else? Lisa was the only one, other than the guys that are in voice. Lisa was the only one who responded. Everybody else kind of understand that?
Oh yeah. Have a game plan before you go into a position. If you're second guessing yourself and you're in the plan, you're already in the wrong spot.
Yeah, good point.
You know. Go in with a plan, be confident, and stick to your plan.
It could take you guys years to create a really good plan. And there are going to be times where you're going to think you have a great plan, and things are going to work out, and then something's going to be thrown at you, and you're going to try to go back to that plan and try to put it back into practice, and it's going to fail, and it's going to fail, and it's going to fail, and you're going to be like, what the fuck? This trading plan was working. What the fuck is going on? And, you know, at times you can go back and look at it and say, oh shit, I didn't realize that, you know, this trading plan was a good foundation, but there was that other little thing in there that I didn't even know could have caused this great trading plan to work or not work. And I just so happened to luck out because that thing that I wasn't looking for, wasn't looking at, wasn't affecting me for these trades. But now it's really starting to affect me. So now I either have to totally throw that trading plan out or add or remove or readjust stuff until you can get these things going. But they're important. They're really important. You're not going to guess. I'm not going to, you know, be here in the middle of the day saying, oh shit, I want to get into this trade. What am I going to do? Like, how much do I put into the trade? How much, you know, what's my position size? How much am I going to sell? When am I going to sell it? I'm going to go through and try to figure all that out. Hold on. Figure out what my position size should be at the moment. I mean, if I'm day trading and I need to get in when something breaks a certain price level, I can't sit here and say, okay, should I use 100% of my account value? Should I use 40, 30, 25? You know, what am I going to do now? What am I going to do now? And then I'll go back up and I'll look at the thing, and the stock price already exploded to the upside or went to the downside, and now I'm already lost. Or if I'm in a trade, right? I'm in a trade, I get in, I already know what my position size should be. I want to do 30 or 40% of my account value. Boom. I know that. I hit the buy button. The thing's starting to move in my direction. Now it totally reverses and it's going out of my direction. And I'm like, fuck, what am I supposed to do now? I don't have a plan for it going in the opposite direction. When am I supposed to sell? I don't know when to sell. I'm just
Yeah.
keep holding.
Also,
I'm just going to keep holding. Fuck, I'm going to keep holding. And now you just lost a shitload of money because you didn't do that as part of the plan.
Yeah, also on top of that, Chris, also on entry conditions, you should definitely set a price target. You know, have a price target and have an idea of what you're getting into, right?
Yep.
Yeah.
So I use like whatever option.
Use
I'm
your
doing.
analysis, whatever it is that you do, and however you do, draw your lines or whatever, your supports and resistance, and get a price target in there.
Yeah, 7% of the stock price, right? So if I'm looking at an entry point on an option trade, I might look, okay, if the stock's trading at $5, well, I'm willing to get into that stock within 7% up or down of that price, and then that's it. So that is important, because if the stock reverses on you, or goes against where you're at, you don't want to get in too high, and you don't want to get in too low, because you don't know when that run's going to be over with.
Yep. Yeah.
So that is very important, I think. I mean, you never want to trade your whole account, because if you do want to try to get into something else on the other side, if the market reverses, you have some funds to do that with. You know, and plus you're trying to build some money up, your account up. You don't want to be 100% on everything.
I can't believe I have never noticed that they didn't have that on there, and that's so fucking important too.
Yeah.
Price targets. I mean, that should be.
Yeah, on both ends, you need it for an exit and you need it for an entry.
Dude, then. Why would they put it on there? I've never fucking noticed that they didn't even have that. At least set price target, something that says set price target on it.
Yeah, set a price
Holy
target
fucking-
so your risk reward is based off your set set target and your risk, and you want to 2-to-1, 3-to-1 kind of ratio.
Yeah. I look at that all the time. Like when I set
Yeah,
up my
that's what I do.
spreads and stuff, I'm like, I'm going to risk 300. How much am I willing to make? Because if we're going to make $50 off of risking 300, that's probably not a good setup.
Yeah. Like I do like 25 shares, I'll risk $1, $25.
Yeah.
Make a $3 move or something like that, $4 move. That's like 4-to-1, 3-to-1 ratio.
The only one where I'll do a reverse, kind of like a reverse ratio, is if I'm selling an option, right? So if I go to sell a call on Amazon because I think it's going to go down more, and I want I want to collect that $100. I'm going to collect that $100, but it might cost me $400 if it goes against me, kind of thing.
Yeah.
That's the only time that I do that, though.
Yeah, that's what I do that, do my analyze. I wait till it gets to a pivot point, or wherever the WAP or, double top, double bottom, analyze it, get my price target, put my stop in for whatever I'm willing to risk to make whatever, and just get your plan going and just go.
Yeah, when I do debit spreads, I don't ever do anything less than 2-to-1
2-to-1.
risk reward. But I usually try to get 3-to-1, but sometimes I get you too far out of the money.
Yeah.
Usually you can get a good price on a 2-to-1 pretty easily.
Yeah, so those are exactly. So those are other criteria that I use as well. The more advanced, when you really start to get into your trading plans, that's what I'm looking for. I'm looking for something that's going to give me at least 40 or 50% return, at fucking minimum. And you guys already know I don't like those. I don't like those. I'm looking for 100%. I need like 75 to 100.
Yeah, I was about to say, man, if it's not cracking a hundo, it ain't popping off.
No, I'm not really a fan of it. But this is here. So this is an Excel document that I created a couple weeks ago. I used a couple times just to get myself back on track. But it's like, it's something that adds to my trading plan. Just a little reminder. I haven't printed out in front of me. And I can go in here and check this stuff off. Like, okay, hey, am I pretty far? If I'm doing a support bounce, is the next resistance level pretty far away, right? What's the volume area type? Is there a low volume area? Is it a high volume area? Is there a catalyst? Am I close by my 200 or my 50 period? Yeah, because I did that in a trade I think it was like a week and a half ago. I jumped into the trade, and it looked like it was going to be an amazing setup, but I didn't fucking look at my 200 or my 50. And I think it was Mark who said something, or it was either Mark or you who said something, and I'm like, holy fuck, right there. Yep, and I jumped out. And if it wasn't for one of you guys saying it, I wouldn't even have fucking noticed that.
Now on your cloud check, are you just looking for like above or below the cloud, depending on which way you're going?
I still don't understand that.
I like that cloud because it's
I do too, but
accurate.
I don't understand it. I want to actually have a screen on it one of these times.
Well, we could just look at that one we were looking at, Christian, that Ollie one. That one was like pretty obvious.
Yeah, that thing.
That thing was crazy.
So what I'm looking for is I don't want it to be riding up towards the cloud. It's hard to break through out of the cloud.
That's where your resistance is going to be.
Correct. So those are support and resistance levels. And if I'm not paying attention, right, and I'm looking at that from this standpoint, and I'm like, okay, if it was, we're up here, I'm like, oh shit, look at this. What level is this? $24? Oh, fuck. It bounced at 24 a couple times. It hit 24 over here. If this thing breaks 24, it can start moving to the upside. Well, now I pull out a study that I use all the time, and like it paints a different picture. Like, oh shit, this isn't just
resistance
something. Yeah, this is right where the cloud is. So now, without picking up that cloud, come on, you've been fucking good this entire time. Without looking at that cloud study, which is something that I use all the time, I'm would have thought that would have been a great trade, and it would have gotten slammed down and dropped. I really don't think AMD, even with the market drop on Tuesday, I think it was going to hit that reverse. But it's a good. It was a good example of me having all these things on here, because now I can start going down the list. Sometimes I'll just be in the middle, in the middle of watching everything and totally forget to start checking the stuff that I check all the time. Let me check this off.
What are we playing tomorrow?
Good. Cloud check. Good. RSI check. Good. Daily volume check. Good. Price levels plotted. There you go. Listen.
What are we playing tomorrow?
Price targets. Boom, boom, boom. I'm not playing anything tomorrow.
What do you mean? We're playing SPY to the downside.
All right. So, I mean, that's really it. Do you guys have any questions? I really think that maybe in like a week or two, we can all come back to this and go over the stuff that we have. Maybe we can all start to create plans and then maybe critique each other's plans, or just send them to me or a couple of the other guys. I don't know. Are you guys cool with that?
Oh, yeah. I'm in.
14. I need 14 responses.
Yeah, I'm good. I mean, I pushed my plan tonight, so I've used that one for a long time for options anyway.
Yeah, I definitely plan on investing more time in the process.
It's it could be overwhelming at times. I don't know how to explain.
Who needs a plan when you could just come into the chat and ask Dustin what he thinks?
Because you might end up with the wrong stock on the wrong end.
And then just go the opposite way.
You only get Dustin intraday, though.
You didn't let me finish. And then you go the opposite way.
Yeah, you can just create a Dustin bot, and we can all just follow that.
I'm in it. Let's go.
So, Lisa, it can be extremely simple as long as it works for you, and as long as it takes the guesswork out of your trading. That's it.
Yeah.
That's really all you need. It's just building a trading plan is taking guesswork out of it. That's it.
The key is to build a plan, have your own plan, and then come in the chat on voice and talk to people during the day.
Yeah.
And control your emotions. That's really key, too.
And make sure you join 12 p.m. meetings and 4 p.m. meetings.
Not control it, Dustin. You can't have any emotions when you place the trade. You can have emotions after it.
Right?
Right.
Nobody can't have no emotions. I mean, you got to be a god.
You got to be robot, man.
Right? Robot status.
These hedge funds, these AI programs don't give a shit. They're just looking for numbers.
Well, you won't care as much if it's not your money.
I throw shit and then leave the voice chat.
You do all the time. Fuck it, I'm out of here.
I have to leave like I don't want you guys listening to me bitch or start to scream. I'll be back in a couple minutes.
Didn't Kramer say the stock market crashed because of the algorithm?
It's causing a lot of problems because they did see some triggers in some of those big hedge funds that simulates a recession. So the software don't care. They just sees these certain criteria being met, and it triggers a sell-off because it looks like it's going to be a recession. But it's day by day. That's why when the futures were so down the other day, when the market.
Well, they froze today, right? 3 times.
Yeah, exactly.
3 times the Dow froze. A form or something on it.
So it is a problem, because they're relying heavily on these algorithms to determine, what they're buying and selling. So.
Yeah, but I mean, what kind of irritates me is how news that's even not substantiated, there's a rumor that the Feds are going to pause rates, and then it rallies, and then there's a rumor of this, and then I think there's a whole lot of that you need to consider as well. Yeah, it may not even be factual. It's just
yeah.
I'm gonna close out of the recording. Let's go back over to Discord. I'm gonna stop this and then close out of the what do you call it? The screen share.
Bye.
Cool.
Bye, recording.
All right, word. All right, we're going back over to Discord. Peace out.
No, we're not.